Happy Friday, 3:24 p.m. Eastern Time on October 24th. Just polished up this thumbnail. I actually did this one a while back, but CPI breakout today. Markets are up. We saw a gap this morning around zero point 0.6 to zero point 0.7 to the upside, and we have just been climbing higher with a very slow and steady grind. Live price at 68.06 on the S&P. Have some measure moves. I am a little cautious of that potential broadening pattern I've talked about the last couple of weeks with technicals. The 50-day moving average on the SPY, Qs, and SPX has still not been touched. We do have some interesting news to wrap up the month, but if we can kind of survive October, it is surprising that that little volatility move from 15, 16 VIX to 29 really didn't do much damage to the market outside of a one-day drop. And here we are just climbing back up. So 6,800 plus. Do we have a sideways nasty pullback next week? Do we have some earnings that are missed in Mag 7? I don't know. Does the Fed bring some pain next week? Probably not. I think this is melt up. I do want to say, I didn't take a look at the AAII for the week, but I think we had a bit of a bullish pop. Yeah, so a little bit. So we saw a pop up in bullishness. So bullishness went from 33.7 to 36.9. This is AAII. We see the neutral camp is still around 20%, and then the bears have declined from 46 to 42. Still, that is, historically high. 1 year historical averages around 31% bearish, 37.5 bullish. So we're actually right on pace for bulls. Neutral camp is a little bit subsided where, they're kind of forcing people to be on one side or the other. It's interesting where we're at. It's like we are more bearish than bullish on sentiment. I think that's why the risk remains to the upside. Everyone is thinking the worst case scenario. We're thinking bubble. We're hearing bubble. We've seen gold rip like crazy. There's a lot of noise. I still think the market is way more resilient than what investors are giving it credit for. So I just want us to be aware of that. Like upside risk is very real. We had a great masterclass today for my daily profit play, and here's the week. So let me go into the weekly candle. My calendar spread, I finally closed it out for a nice little profit. I was in for it was like a 690, closed it out for 760. So just under $100 on that one, which is a little disappointing. I didn't realize how much I was paying for the put side of that trade, but it is what it is. Like the put was worthless. The call side was looking to get pinned, but I thought I'd make a few more dollars than I actually did. I thought I'd make a few $100, and I made like 80. So it was fine. But this is a Monday, Tuesday that if we're getting up towards like 68.10, 68.15, I should have been seeing some more profit. Anyway, it doesn't matter. It was a win. I'll take it. So I'll go ahead and delete these lines. But for the week, here's what we had. We started out positive on the week, came down with a retest and a gap fill on Wednesday, bounced hard at that VIX box low for my daily profit play indicator on Wednesday, and have melted up from Wednesday afternoon into Thursday and even into Friday with the news. So market put in a low for the week. Wednesday, here we are at all-time highs. Let's zoom out a little bit further, and you will see here that unless, and again, it kind of all comes back to price. So it's interesting how this market has used support back here in May, support here in June, again in August, again in September, even through that one day move on October 10th. It's just higher lows, right? Everything has been higher lows. I thought for a moment, I don't know what happened to my drawing tools here, but I thought for a moment this might be a level to watch. And I really think that it still is. This is 65.60. If we break that lower break, basically 65.50, there's room to go down. But now that we've taken out this high, the measurement and looking for a breakout doesn't really play out anymore. The breakout to the upside, I had drawn this earlier. I talked about these in a couple of videos on TradingView and all my socials. Let me go to this chart here. Chart alarm at the lows around 50s. Here's that potential breakout. I'm still just a tiny bit cautious for this reason. I'm not sure where my drawing tool went. Okay, I'm cautious for this reason. If this was a, I guess I can look at the technicals and see where we are at, but I'm almost guaranteeing that we are still at overbought conditions with divergence, and it just keeps printing and keep printing and keep printing. This little flush may have been a nice little reset for volatility, but if we turn the corner hard next week to the downside, don't be super scared that the market maybe comes down and retest either the 50-day moving average or test the October 10th low, maybe. But if we do no real damage other than maybe a pause next week and then try to grind higher, I think this market is just trying to do everything it can to finish the year on a strong note. One early, I read this morning in it was a Seeking Alpha article that's like, super. Is it the next bubble or is the next super cycle? And again, this goes back to upside risk. I think that this market might still have the capacity to surprise investors to the upside, to surprise investors. So this idea of like, oh, it's going to limp in for the end of the year. It's going to barely get to 7,000. We're not going to get to 7,000. Who knows? You know, is it possible this market blows through 7,100, which if we get to 70, 80, I've already got this marked out here in this blue line. This is a 20% year to date target. So if we're at 70, 80 SPX, that's a 20 plus percent year. That would be 3 years in a row. This is just like the late 90s. And yes, it came with a whole lot of corrections. It came with a massive bear market and a bubble. But who are we to say that the market's got to stop going up? You know, there is fiscal dominance. There's monetary policy. I mean, unless we're going to see unemployment rate, truly, if we're going to see unemployment rates go up to like 4.5, 4.6, 4.7, maybe that's a bigger concern, but the Fed is looking to, and cutting is not necessarily the greatest thing. Usually, a cut cycle is followed by a recession, but the Fed is trying to thread the needle. The government's trying to thread the needle. At some point this ends badly. At some point we have a fourth turning. At some point there's major disruption, but here we are talking through all-time highs again. So the market remains path of least resistance. Maybe some shakeouts between the 21 and 50 period. I would not be surprised to see some additional volatility in these coming weeks just because we still have a buyback blackout, but we still have strong earnings. So far, it looks like this week was pretty solid. We had a nice gain this week in my Newsbreakers service on Tesla, and I'm certainly glad we took profit. I think that everyone in Newsbreakers should be happy that we took profit because we had a tiny little win of about 15%. Considering we were in this trade riding this thing from 414 or so all the way up to our 445 line in the sand. We took a nice little profit. It was good enough to get out for a break even. We had a full win today on Intel. If you held it all the way, we need price to stay above 37.30, which for the next 28 minutes is probably looking good. I closed this thing out as a max credit of 50. I closed it out at 48 cents while price was up today. So I'll take the win. That was 95% of the max credit. So nice little win there. I think we took a 92% return on risk trade on Intel. We had I was very conservative this week in daily profit play. We had a nice week out of double ups. Took 190% winner this week in double ups. Had a couple profit traps, which were pretty sweet, and that's always helpful. Took a trade today in daily profit play that I made the executive decision to get out of. We technically would still be in the dead zone right now. So if you didn't get out of that trade, you're taking on a bit more heat these final 28 minutes. We need price to get above 68.10 or get down below 67.90, all within the next 28 minutes. So, I was watching to see as kind of the afternoon started. It's like, okay, like gamma level 68.25, positive gamma all the way down here. We could certainly stretch, but you can see here that clearly price is stalled. I did mention this in my daily profit play masterclass today. We went pretty much exactly to the measured move of 1.02, 1.83 on the VIX. So my daily profit play indicator right here, doing a pretty fantastic job like it does. That's why I built it, of calling the top of the day. Now, I don't love the idea of calling the top at, 10, especially late in the day when it's like pure gamma risk. Like we might see some, move up that maybe closes higher. I don't want to take that risk, but I'm curious if I did let's go to today. Let's see what the 24th looks like today. So 24th, 10, 15. I mean, I get 50 cents. This trade was offering like $1. I don't remember this was $1.20 during the session that I was doing the masterclass. Probably. I think we did like an 05. We were looking at like $1.95 here, so it's still showing some profit. But anyway, I didn't force a trade. But that still would be like a pretty good level to defend. If there's any way that this thing, I think it's a silly trade. If I was like, well, I'll put in like a $4 credit. Well, maybe, but price would have to go all the way up to like 68.15 for it to be filled. I'm not going to take that trade late in the day. I'll take the positive week. Up a good, $9,700 a day, back up to 600K for the year. Happy with that. And, we'll continue to watch everything unfold. So, let's see here. What's up, Jordan? Mike, thoughts on PGRs and progressive? PGR at 219. I already have some exposure on this one. I have some ratio spreads on PGR. We had earnings here, surprisingly missed on revenue and EPS. I think fair value. I mean, earnings companies typically fill gaps. I wouldn't suspect this is going to go too much lower. I mean, in all honesty, it's like it's still a strong fundamental company, lots of cash. But I do have some trades in. It's a ratio spread. It's project options edge. I already have a couple of trades running. I think I'm down to one trade left in PGR. So it's a 195 by 190. It still has a 91% chance of profit. It also offers me a $5 profit trap. This is out to the beginning of January. So it's 80 days out. If price stays, let me look at the option chain here. 190 is my threat level. So, I mean, right now there's about an 85% chance of profit. I think with this lower beta, probably more like 90% chance of profit. Also, that profit trap looks pretty good. The delta remains pretty controlled. And as long as price stays, above 190, I'll make full profit. If we somehow get really lucky with a profit trap, I could grab an extra $5 out of this trade. It's already worth a couple dollars of income, I think. 210 income is what I'm expecting to make on the trade. If I can close this thing down for 10 cents debit or less, that'd be great. If I get any profit trap love in there in the final, maybe 1 to 2 weeks of expiration, maybe this $210 can turn into $300, $400, $500 profit. So thoughts would be this. I'm going to hold the trade. So I'm in. Let me see what IV rank is. I'm showing an IV rank of 13. Interesting. If I went out a little bit longer, so I'm not sure. I mean, I'm not looking super long term on anything right now. I think the longest expiration I have on some of my trades is out to like summer. I think it's June. I think it's June of 2026. That's as far as I've gone. So again, I wouldn't be shocked to see this thing kind of stall out and then fill a gap. Maybe by the end of the year. I mean, I wouldn't take this like immediate expiration. I would probably look out to like December, January and see if this thing goes higher. So let's take a look. I mean, fair value on this thing, I think, is higher, pretty sure. So PGR, Snowflake should look pretty good in this. It does. Earnings forecast to decline below estimated value. It's like these things are cash cows. 12 times earnings, not super pricey. Fair value 480 versus 220. I mean, if you're willing to hold and dollar cost average into these, I mean, insurance should be killing it. And I'm pretty sure Progressive, along with your other major insurance companies, is going to continue to get bigger and bigger. And it's all of a sudden it's going to be like one insurance company to rule them all, and you've got to bundle everything. And yeah, who knows? But fundamentally, it's still pretty strong. I'd obviously like to see some pullbacks. This moving average has been pretty solid. This is a 1 year. This is a 5-period 1 year moving average, which from a larger standpoint, this is a good longer term support level as far as like allowing most of our corrections to still be in a bull market. So, I mean, if we got a little aggressive to the downside, anything below $200, I think is a pretty good value play. So for under 200, I'll probably look at this as a fresh opportunity for something on Progressive. Let's take a look at some other ones. So Progressive, Chubb. This one's been a little bit noisier, but sharp bounce off the lows at 265. It took some profit on that one. I'm trying to think of some other insurance plays. Maybe AIG. Similar price action. Let me see what the competitors are here. So we have Chubb, we have Travelers Companies, Allstate, Arch. I mean, price to earnings all pretty low on those, which I find kind of interesting. Yeah, price targets higher. Fair value, discounted cash flow higher. I mean, I was actually thinking, I'm like, what would possibly disrupt insurance companies? Because I feel like the last thing I want to do is actually make things cheaper. So I think insurance is just like a forever consumer scam. I mean, you need insurance like for 1% of things. You're glad you have it, but it just feels like a ripoff when car insurance is up 50+%, homeowners insurance, property insurance up 50+%. I've had my own policies like double since I moved out here to Utah, which is not cool. And yeah, price of everything goes up. So you have to fix stuff like, why is car insurance more expensive? Well, fixes are more expensive and labor is more expensive, and therefore they ding you. So it's all different, man. But fundamentally, like I said, it's still good. All right. Thanks, GFX. You want to send me some free thumbnails? I'll use them. Or I can go troll some other people about their thumbnails. So you good on that, Mike? All right, very good. Okay, final 20 minutes. We would be in the dead zone for daily profit play, so I think we made the right decision by managing that risk and taking a small loss today. We had the aggressive 5-minute move, so this is the first 5 minutes of trading right out of the gate, 72 to 90. I mean, most of your day's price action was done in 5 minutes, in addition to what the futures market did with CPI, which was a huge rip. So we opened, ripped higher, stalled around here, slowly and steady. But that's it. So 10 to 90. So unless we get really, really lucky with like a close at the end of the day below 90, I'm happy that we saved some risk and we got out for very manageable loss, like 110, 120 bucks versus 390. I think 390 would have been my max loss today. So, if somehow the market does something magical in the next 20 minutes to get down below 67.90, then, it is what it is. But I think we made the right call. So I was pretty conservative. I do want to ask. I do want to ask who was in my daily profit play session. 6,805 wide butterfly. Let's go. Sweet. What's it showing for now right now, Larry? I mean, 340, dude. You got to be nailing that thing at 6801. Is it time to take some profit? I tried to get filled all morning on a butterfly spread. It wouldn't take. Here are my canceled orders. Let me see here. So I was looking at a 70 pin, 68 20 pin, 6800 pin. It was never offering enough premium for the day. I think that the most I saw here was like it was like $9. It was trading for like $9, which is fine, but I wasn't going to take $6 risk. So if I was able to get down to like less than $200 risk, then I would have taken that iron fly. But just didn't set up the right way. But yeah, 6800 is pretty sweet. So what'd you get in for? 5 wide, you pay like less than 50 cents for that. I mean, it's got to be looking pretty good, man. You're right at 6,800. And 5 wide, man. I feel like you'd be in some better looking profit. But again, maybe it was super cheap. What was it? What was the debit? Was it like 30 cent, 40 cent debit to go 5 wide? Like, it's looking good now. Anyway, do your thing, manage your profit, dude. Yeah, 40 cents showing $1.60, $1.70. That's awesome. That's a great trade. Yep, great trade. Cool. Let us know where you close it out. If you're managing now, if you're going to hang out there, look, those last few minutes are very slippery with a 5 wide. It looks great now, and all it takes is just a quick bump one way or the other, and all of a sudden that 5 wide butterfly is worthless. So I wouldn't mind taking some profit if you're up 300-400%. Good stuff. Okay, what else we got going on today? Discord, we're good. Let's do a little spot check for the day. SPX up 0.91, SPY up 0.9, Nasdaq up over 1%, Q's up 1.18, Dow up 1.12. I mean, that's pretty impressive. Dow's keeping pace, actually outperforming S&P just under the Nasdaq. Russell leading U.S. index of the day, 1.3 on the Russell. VIX, big old crush on the VIX from 29 down to 16. Dollar index. Let's go dollar index here. Dollar index still pretty sideways. May be able to get another thrust into this 200 period moving average. I think the dollar maybe surprises more traders to the upside. I wonder. I don't know if I can. I don't know. This is going to be an interesting trade. This one should be like really, really high probability. I don't think this is going to be a good trade, but I'm curious because it's so cheap. Yep. There's nothing good on this one. I was going to look at getting long UUP. I don't know. I mean, maybe I'm like dead wrong here, but I'm curious. Like, what could this thing be if I did like a $30 long call? It'd just be dirt cheap. It's not dirt cheap. Holy crap! It's still $5. So 33 delta, and we'd make a $2 move. Like, no thanks. I'd rather trade FOREX, I guess. Looking for $2. All right, man. You got to be close. 15 minutes left. We're nailing that 6,800. So keep a close eye. And I hope you hit it, Larry. All right. Anyway, dollar index. So I think the dollar still has a bit of a short-term play. I did mention this week. One thing that would be a little bit concerning would be if the dollar catches a good enough bid to get back to like 101 or 102. It doesn't stop. It doesn't stop. I think this has been a very crowded trade. This is one of the uglier starts we've seen in like 50 years to the dollar. But you look out onto a higher time frame here. Longer term, I might even go even further than this, but it goes back to, I'm going to go longer. Let's go monthly. Okay. So is it possible that we are in a longer term uptrend in the dollar? Or maybe just a range. But if this might be like one of the more surprising trades for the next 12 to 24 months, is if somehow the dollar finds a bottom here where I'm highlighting price, and then we go from this low and work our way back up to the channel highs. That would be one of the more crowded trades, creating squeeze after squeeze after squeeze, and that doesn't look good for the stock market. If we see the dollar gain that much strength, we're probably going to have some pretty severe risk off trading. So I don't know if that's the case, but that's I don't know, that's a maybe. I think that's one of the more surprise storylines if we see the dollar doing the exact opposite of what everyone thinks. End of the dollar, end of the world reserve currency, blah, blah, blah. Well, maybe it does the exact opposite. But I think you got to be pretty bearish on everything else. Nice, Larry. High five for Larry all around. I wish I had some confetti to throw out there in the YouTube channel. If I had one of those sweet little dashboards. But Larry, that's a big win, dude. 40 cents, so 160. Nice little 400% winner today on a butterfly spread. It's pretty sick, dude. Good trade. Very good trade. All right, dollar index we'll watch. Oil. Nice little 3-day rip on oil. My oil futures, I need to stay above $50. Is looking pretty promising for the end of the year. Natural gas, we're looking at UNG. We're at $12.99. I mentioned this one. If you want to get long UNG, like buying some shares, it's pretty cheap. I don't think this is a bad trade out to like 2028. I do have a call out to 2027, so I'm not going to buy the shares at $13. This has been a widowmaker for a couple of years, where it's just been difficult to get a sustained trend. But going from like 13 back to 23 would be a fantastic trade if you ask me. So could I risk, $12.90? I mean, could I risk $1,300 to make almost double? It'd be close. I mean, that run, if we hit those highs, you're up 77%. We hit the highs, you're up 87%. It's not a bad return on risk. Okay. So thoughts there. I mean, I'm long with a $5 call. It's a deep in the money call out to 2027. So anyway, I like natural gas. I think this demand, this data center build out, everything we have for from oil to gas, natural gas, nuclear, solar, wind, water, whatever. every ounce of energy we can muster up and throw at this data center stuff or this AI future. I think we need it. So if the demand is there, then I think natural gas is a pretty strong beneficiary. Gold, we've come back to the 21 period moving average. I hope there is a bit more of a pullback. To be honest, I hope we have more. I hope we have more into like the 50 period or 200 period. Anything in here looks pretty good. 50 to 200, I am dollar cost averaging into gold. So I'm just trying to be patient. If it bounces here and goes right back to highs again, maybe some sideways, but I'd like to see some more pullbacks on gold. Silver, same thing, pulled back to the 21. We're kind of hanging out around the 21. Do we fall lower? Find the 50. I've got trades in SLV, GLD, CEF, PHYS, all dollar cost average levels. See if we get filled in those. Okay, final 10 minutes. I'm watching for the daily profit light dead zone today. If we're below 67.90, I'll watch. I mean, I'm out of the trade for a small loss, but I'm curious. Do imminent rate cuts not threaten the dollar's uptrend? I don't know. It's not necessarily that. I think it's more like here's where I think the risk comes in. I mentioned this a couple times these last couple weeks. I think that the biggest tell for risk on or risk off trading in the next like 6 months is going to be after the Fed cuts in October and cuts in December. If this 10-year yield is not down another, I mean, this is what's crazy. We're looking at another 50 basis points of cuts next week and December. That would put this thing down to like 3.5 or 3.4. If there is like a correlation with the Fed policy and the long end of the curve, but there's not. The Fed is only controlling the short end of the curve right now. So I don't know if this goes down enough to justify the improvements in refinancing, the improvements of debt restructuring that everyone is hoping for. Okay, businesses want lower yields. Homeowners and wannabe homeowners want lower mortgages. Financing, buying cars, big purchases, financing anything, it's more expensive. So everyone wants to see lower rates. And the trend is that when the Fed starts to cut, rates will follow. But we bucked that trend in 2024, and that is going into 2026 is my biggest concern. Is that, look, we just cut 25 basis points. We're cutting another 50 basis points. That is 75 basis points plus what we cut back in 2024 when the market did the exact opposite. So my point is, if we have cut in here where I'm highlighting my mouse, this was a 100 basis points cut in Fed funds rate and the market went up. That's not what it should do. It should be going along with the trend of rate cuts. Okay. So if we cut again and this is coming lower, fine. But we should be lower. So the risk premium that bond traders are asking for, bond investors are asking for, is keeping this pretty elevated. So the concern is that this stays relatively stuck. And when I see like dollar strength or I see dollar weakness or anything in the bond market, to me, if we end up going back up in yields, that is down for bonds, probably down for dollar, and possibly, I'm not really sure, but I would say probably down for equities too. Because this to me is like a risk. This is like more of a risk off environment because all of a sudden for the last like 2 or 3 years, everyone that's been holding and waiting and hoping for improvements of debt refinancing is not going to see the big improvements. You're going to have people that have been wanting to get into a home and all of a sudden yields go back up and mortgages are all of a sudden going to be back at 6.5% instead of low sixes, right? And home prices are maybe the same. Maybe they're stalling, they're pausing. Maybe they're going to have to come down a little bit. Something's going to have to budge. Either home prices have to come down, which will be not new home sales, but existing home sales will have to come down, which means people are going to have to tap in to what they think their home is worth, and they're going to have to settle for less. Or mortgage rates have to come down. And right now, based on this, it's like, I don't know if mortgage rates come lower. I hope that they do. That makes everything a lot easier. But if this goes up, I think that's a major red flag going into 2026. So that's where I think the dollar strength in the near term maybe comes from is maybe, we see some fluctuations in the treasuries or in the bond yields, and we watch that going into the next, maybe 3 to 6 months. Okay. Mike, what's that trade there? So let's see here. You did a put ratio, buy the 190, sell the 185. That's not bad. What's your expiration on that, dude? January what? January 16th? That's not bad. Um, did you just take that trade? I mean, here's what I would do on PGR. Let me take a look at it. PGR, we're in a downtrend. Let me see what like January looks like. I could probably do a ratio spread here for a quick $100. Let me see what this looks like if I can go ratio spread. So that's for 225. Let me move this strike. Oh boy, that was a huge drop off. So 225 for the 195, 190, 190, 185. You said you got filled for $1.25? Huh. I'm seeing a mid at 60. I mean, that's a 94% chance of profit. There is a 10% assignment risk. If you own the shares, it'd be down below like 179. Not a bad spot to own some shares. This is a little bit better for $1.50 or so. So 190 by 185, not a bad trade. Do I want to own Progressive? What is the beta on Progressive? It is interesting. Like, why is this the only insurance company that's going down? CB is up. Let's go to Travelers. Travelers Companies is up off the lows. Allstate is down. Okay, so Allstate is down. Progressive is down. Progressive looks like we're breaking a little bit of this structure. I mean, 190 is way down here, man. 190, 185. That would be from top to bottom. We'd have to have insurance be down like 36%. That's a pretty big swing on a 0.73 beta. So I don't know. It's weird to see like this is clearly like not the trend that you see elsewhere. So I'll probably just ride the current trade that I have out right now and call it good. Got it. All right, that's good, Phil, man. Okay, final 4 minutes. We're at 67.94. Is it possible to drop to below 90? I'm just curious. Like I said, I already took the small loss on the daily profit play. It's in the thick of that dead zone right now. We'd have to get below 67.90. But it's, I don't know, maybe it's possible. Final 4 minutes. Let's see. Do I have anything in my SPX? I have one butterfly spread. That's worthless. Yeah, that's pretty worthless. Okay. I mean, overall, like pretty good day. Win the day, win the week. Not upset about that. What else are going on? We left off with dollar, oil, gold, silver. Let's do Bitcoin for a moment. Bitcoin at 110. We'll trade over the weekend. We'll see what happens. Still watching for all-time highs. Maybe this Fed cut in October will help give a little bit of a boost. They call it Uptober, I believe, for Bitcoin. So do we have a late charge? I mean, is there a rotation from gold's pullback into Bitcoin? Yes, no, maybe. So I don't know. But it'd be exciting to see Bitcoin rally back up to 126, 127 again. That would probably allow me to revisit like 700K in earnings for the year. So we'll see. There's enough invested where I probably have that type of fluctuation. If we hit all-time highs and get a little Q4 rally at Bitcoin, that'd be really exciting. 93, 94, final 2 minutes. Let's see what happens here. So JP, I just want to go back to your question on imminent rate cuts so in the dollar's uptrend. I don't know, because I think the dollar is catching a bid with any type of risk off. And so if the market flinches and we sell off a little bit, look, this is ultimately where I'm thinking the market's going. We still have consolidation, and this is a broadening pattern. This is a very tricky pattern for most short-term traders. It's noise for most medium-term traders. Okay. So would I be shocked? Would I be shocked to see the market, hit all-time highs today and then sell off and fill this gap early next week and fall next week on whatever? Are we going to fall on core PCE, the Fed, Mag 7? Is there any misses in fintech next week? Is there any misses in large cap tech? I don't know. Is this market truly priced for perfection? Are investors going to second guess all the capex spending that Meta and Microsoft and Google are doing? I don't know. So, but it's a broadening pattern and it's possibly noisy. Oh boy, we're at 90 right now. That's crazy. Not below it though. Well, there's your dead zone. So we've got one final minute. We push it down to 89. See if daily profit play traders get lucky if they left it for the day. Nope. Okay, so that would have been a full loss if you held on to daily profit play. We took a small loss. We lost about $130 on the trade, I think, $130, $140 versus $390. So overall, pretty happy with that. We came right back to where the day started. So this is our opening candle, ripped up in 5 minutes. We came right back down to settle within that like 5-minute shot. Overall in the day, market makers 72 to 91. We were within about 19 points of the day. But it's just funny how this market was like straight up in the morning, straight down in the close, and settled in. That's why they say amateurs open and pros close. Yep. So here's my warning for next week. If this is a broadening pattern, then next week might not be a lot of fun. Okay. Am I saying that's what's going to happen? No, I'm not. But if we all of a sudden turn the corner aggressively next week, or maybe it's like hey, Wednesday, Thursday, big earnings on Mag 7, Fed on Wednesday, PCE on Friday, keep an eye on this stuff. Okay. So I could see this be a noisy pattern where we just broke all-time highs. Everyone's all excited about it. The VIX got crushed, and all of a sudden we have another big move to end the month with like, oh, wow, a couple of big volatility events in October. And then see if the market can shake it off and just kind of stabilize. But as I've said the last couple of weeks, sideways is a direction. Okay. Markets can go up. Markets can go down. Markets can go sideways. We went down this year. We went up this year. We can go sideways. Okay. A lot of times the sideways can be tricky when it does stuff like this where it makes slightly higher highs, maybe slightly lower lows, but that could be flirting with the that 5, 6, 7% corrections I've been talking about. If we come back down to the 50-day, that's now a 3.5 or 3.5%, 3.15% correction. Coming down to hit slightly lower lows from October 10th, they'd be about 3.7. We poke the lows here. That's about a 4% correction. I can still see it. I could still see the market easily doing a 3 to 5, 3 to 6% correction before and maybe just kind of stabilizing in for the year and maybe slowly grinding higher. If I'm wrong with this broadening pattern, it just keeps going higher and higher and higher. That's okay. Let's get to 7,000. Let's celebrate it. We'll have a bunch of winners on waterfall income. We'll hit the year on higher watermarks, and let's make sure we're just protecting our risk on the turn of the new year, because it's a clean slate and anything can happen in 2026. So, like I mentioned, is this going to be the next bubble, or is this going to be the next super cycle? Because I still think with sentiment this high, everyone's worried about a recession. Everyone's worried about a bubble. So it probably stays frothier longer. And, Buffett's indicator of GDP to stock values probably stays overvalued. Markets show technically overbought conditions. I'll keep an eye on inflows and, ETF inflows and money flows. Maybe it's still pretty steady, but this type of, upwards higher than average bearish sentiment to me still spells risk remains up. So it's a tailwind, not a headwind. Okay. But next week, if I'm right on this broadening pattern, just be mindful that this might sell back off, have a little volatility. Off we go. Like, just be ready for anything. So we'll watch. That's all we can do is watch. I'm guessing it's going to be the rest of Trump's term before he gets sideways. Yeah. I don't know, man. I just try to tune everything out. There's so much noise in the market. I know there's stuff going on with U.S. and Canada. I don't even know what it is. Price at highs today. We knew we were going to see inflation printing for news. The market didn't hate it. The market went up higher. It is warmer inflation, but it's not breaking the bank. In order to grow, you have to have some inflation. It's at least, if the data is true, it's a tiny little increase in inflation. It's not runaway. We have steady unemployment. We have softer labor market, but it's a low hire, low fire. So it's not like the unemployment rate is trickling up to 4.5, 4.6, 4.7, 4.8 and becoming a threat. You know, I just think that, what I'm more nervous about is, let's say we get some type of really ridiculous rip up in unemployment and we go to 5.5% unemployment. My concern is that those jobs don't come back. That's my concern. Similar to COVID, everything that happened during COVID is still being felt today. Super disruptive. And all the jobs that have been cut in the tech space from 2020 to 2022 are still being cut today because tech is a huge part of our economy, you know? And I mean, the Nasdaq has been like literally the best performing index of the last 30 years by a long shot. And tech is going to continue to offer high margins, do more with less, and innovate. So I don't think they're going to do it with more people. They're going to do it with less people. And AI is a big build out for profits, right? All right. What's your view on major currency pairs? Sure. So I think the ones we need to pay attention to, the yen has still been an interesting trade. Technically speaking, I will say this with defined risk. I'm curious what this new prime minister looks like for the near term outlook on the Japanese yen. On the bigger picture, I would not be surprised if this offers one of the better asymmetrical trades in currencies in the next maybe 1 to 2 years. I know that's a big picture, but if the dollar yen was back up here to like 158 or back up here to like 160, 161, part of me wants to just take a stab at like long FXY, which is a way to like buy a stock that trades with the strength or weakness of the yen, and just buy the FXY at these lows. I already have some positions in it. I have like a couple thousand shares of FXY. I'm holding this one for the like medium to long term. I think this ultimately makes a run to like 74. I own the thing at like $59. If it comes back down to these lows, I'm probably going to buy another tranche of shares, probably another, couple thousand shares. So I think, if I'm right as far as like, and this is not a good thing. Like this is a risk off. This is a like flee to safety type trade. But if something happens in the, fiat system, the dollar, our debt markets, something tells me that the Japanese yen has typically been a very safe haven flow. When the Japanese yen gets stronger, it's mostly like risk off. So if I'm buying this thing nice and low, I'll throw a couple $1,000 at it, and if I'm dead wrong, I'm dead wrong. But if I own it here and all of a sudden the yen gets, 5, 10, 15% stronger, I don't care how long it takes. In futures, I can maybe go out 6 to 12 months in a futures contract. I'm not sure what they're going to give me right now for 6J, but 6J, I can go out to summer of next year. I don't like it enough to take that trade. I need a much bigger window. If I can go out like 2 years, if I go out 2 years on 6J, I'll take the trade. So I'm probably just going to trade either individual currency pairs for the Japanese yen and Forex trading, or I will go long FXY and just own shares. I can go out to 2028 on this one and buy, I can buy a call for $700. I can buy a call. And it's trading. I mean, if you want to do like a classic in the money, like buy there's a, zebra strategy. It's zero extrinsic back, blah, blah, blah. It's an acronym that I've seen Jenny and Liz use it for Tasty Trade, but it's a 70 delta. You buy 2 of those calls and then sell a 50. Okay. So it's basically a fixed cost synthetic play that gives you like 100% exposure, like you're long the stock. And it's the nice thing is it's fixed. So you can only lose, like the debit you paid for it. And if I went out long enough, like January 2028, I'd like to think that's enough time to see something in 2026 happen with the yen, 2027 happen with the yen. And it would be much less capital at risk, right? If I did this trade, I'm just going to do this here just for fun. So if I bought the 70 delta call and I put in 2 contracts here and sell the at the money, we'll sell this 50 delta. So for instead of paying, let's say, buy the stock at $60 instead of paying $6,000 in cash, I spend $1,400 as a debit. I have a max risk of $1,390, which would be the cost of my debit, and I have unlimited profit potential. The gain on this trade, if I'm buying it at 54, my break even would be 67. Like that's where this thing gets jump started, but I'm essentially trading like a 1-for-1. So let me build this trade out really quickly. If I can go option strat, build, I'll do long call. I'll just build the trade out here. We'll go FXY. If I go out to January 2028, if I buy, I did 54 and 62. So I'm going to buy the 54 with 2 contracts, and then I'll sell the 62 with 1 contract. There. So this is my zebra. So live price here, I pay my debit. Okay. And the nice thing is if I'm right, and this is probably not when I take the trade. Like right now, it's not really low enough. I'd be more interested to see like when FXY is, maybe down here to $59, maybe down here towards $57. Then I'd put on that trade, because that trade with the likely catalyst to go much, much, much higher. Let me see what this thing pays. If we did it now and it goes up to like $65, let me take a look at this on option strat. So up here towards $65. I mean, depending on how long it took. So if we had to run back to like 70, you're going to make 50-60% return on risk. But as time goes on, like let's say we get to, if this is out to January 2028, let's go all the way out to end of year 2027 or 2026. So December 2026. So if we're at $70 here, I'm up like 70% on that trade. It's not bad. It's just way less capital intensive. That's all. So anyway, it's on the radar. And I'm talking about this because somebody's asking, bias and intraday stuff and short-term trading and FXY pairs. Fine. I mean, look, I'll give you my direction on every currency pair that I trade. Aussie CAD, I'm still bullish. Okay. I'm bullish on Aussie CAD. I am still holding out for Aussie Swiss long, looking to see if this is a price pattern. I can issue a bottom trade and a bottom trade that gives me something to measure. I'm still long in Aussie Swiss because of positive swap, and I'm trying to get a measured move for a 3 to 5 wave move. Yen crosses, I'm not taking any yen crosses unless I want to most likely trade FXY. Aussie New Zealand, I'm in a sell trade right now. I sold this thing around 1350. It did not get filled at 1440, so it's not yet. So I've taken one trade at 1350. It's up about 25 pips. I'm bearish in this one right now, back to 110. Aussie dollar, I have been buying dips. So I don't love this. This has been like the most ridiculously tight currency pair all year long. But after we had our blowout trade in April, if you just bought Aussie dollar, it has been slowly going higher. I still think there's room to go to like 68, 6,900. Okay. I think the Aussie's getting a lot of love from gold and commodities right now, which is why it's staying really resilient. And the dollar's been obviously pretty noisy. But I still like this trade to the upside. CAD Swiss, I am actively looking to see like if this thing will ever put in a bottom. I'm looking for a minimum 3 to 5 wave move to the upside. It just hasn't happened yet. I own CAD Swiss. Like I'm in long CAD Swiss. It's positive swap right now. Even if the Bank of Canada cuts to 2.15%, I'm still getting positive swap in this currency. I hate the fact that I'm in a drawdown, but I'm going to stay with it. Like this currency pair to me is crazy. And I also think that one of my favorite trades in 2026 is going to be something with long energy. So by like April, May, June of next year, I think that if oil gets a bid, I think the CAD gets a lot stronger, and this pair could be, ripping pretty aggressively back to like 6,000 or so. And if it does, that's a lot of profit. So, you're asking me for intraday. I don't have an intraday bias because I'm not a scalper. I did that stuff when I first started day trading. If you want a scalp strategy, I'll literally tell you what I did for a year and, grinded, 10, 20 pips a day. I looked at no bigger chart than a 1 hour time frame. And I used moving averages that were pretty aggressive, like a 5 and a 9, a 5, 9, 21, 34, basically Fibonacci based numbers. And if my 1 hour, okay, I have no symbol for it. I don't know what that means. If I go 1 hour, what's my direction? Is it up or down? And then I go 15 minute. Okay, 15 minute. And then I want to align it. So I want my 1 hour and 15 to be in the same direction. And if I'm going to enter, I would go 5, 3, or 1. And I want to align those. So if I'm looking for intraday, I want all these to align. Follow the trend of the 1 hour, align the 15, get into a buy zone, and then scalp on your intraday. That's literally a system that I used for a year with a professional currency manager, and it still works. Why did I deviate from this? Because I'm just not a high leverage trader day to day. I watched a guy that emotions like every single day for trading 50 to 100 lots a day. It's way too much stress for me. So I just went to bigger swings, went to bigger time frames, and that made my life a lot easier. Like I know myself, and my day to day fluctuations emotionally was too much. So I don't like intraday. But if you're looking for something intraday, align your time frames and scalp. There's your intraday. Swiss yen. This is why I said wait for the trend line to break. It didn't, but I wouldn't be terribly surprised if it does happen at some point in the near future. Once we get on the right hand side of the trend line, I think Swiss yen could be a fantastic trade all the way back down here to 164. But we've got to see a topping pattern up here. I hope we get one. I hope this is a beautiful swing trade at some point. Euro Aussie, nothing. Euro CAD, nothing. It's still in an uptrend, obviously, but I'm holding off. Like if you're going to sell this thing high and maybe get a pushback in these moving averages, selling nice and high. If you get some overbought conditions, would be great. Euro Swiss, we're right back down to 92. This trade again is like kind of driving me crazy. I hope this level holds. I hope 92 holds and we work our way back up into like 93, 94. I'd love to see this thing go all the way back up to like 96, 97. So we'll see. Euro pound. Pound is weaker compared to the euro. I've been trading this one to the robot primarily. Euro yen, just like Swiss yen, hasn't broken the trend line yet. Watching to see a big price pattern. Euro New Zealand, overbought conditions. Okay. Be mindful of this one, but this one is likely going to be heading lower. I think this one heads a little bit lower, just based on technicals. Euro dollar, noisy, super noisy. I wouldn't mind seeing the euro dollar pulling back to like 112, 112, 110 to look to buy more. If you're looking at this as a potential channel, this is one thing I also can't ignore. Maybe the surprise trade, right? The surprise trade is up here at resistance, 118, 119 resistance, and this thing falls back down to a midpoint around 112, right? You put a midpoint in this channel, maybe 112, maybe all the way down here like 106. But to me, this is a bullish channel. It's like, is this truly resistance? So, I mean, either one is we come up high that I can sell it high with a tight stop loss, or two is I look to dollar cost average in between like 112 and 106, and I just buy euro dollar here. That's also a very sketchy play because what if we got back down to like parity? you know, I don't want to be stuck in a trade. So I don't know. I've really got to like it on euro dollar, which I don't. I'll probably hold off on that. A pound Aussie, nothing. Pound CAD, similar to euro CAD. Sell it high. It's very choppy. One thing this has been doing is scoring points, pulling back, scoring points, pulling back. So either buy the dynamic support here on the smaller time frames, or get to resistance. Poke these highs, get resistance, and then sell. It's been doing that very steadily for the last several months. Pound Swiss, I'm stuck. Not stuck. I'm in at 107, and it's upside down. So I mean, the responsible thing is I probably should stop myself out of this trade and just take the loss. But if it turns around, I don't know. I mean, this is literally sitting outside of this like 2011. No, that's 2022. That was the lowest low we've seen. We had a 2015 flash crash low. We had a 2022 bear market low. This is the what was this one? Was this the bond market? This is like the UK gilt market in 2022. Was that right? Because I don't think that was all Swiss pairs. I think that was just the pound. Anyway, I'll see if we turn the corner. I'm holding a very small position at 107. I'm only down, 112 pips. So I'll wait. I'll kind of wait and see if this one figures it out. I'd like to see it go up. Pound yen on the back side of the trend line, euro yen, Swiss yen, pound yen, dollar yen. They're just not giving us the confirmation to sell it yet. Okay. Pound New Zealand, nothing. Pound dollar, meh. I like euro dollar better. New Zealand CAD, I'm still actually long in this one. This one is like an accumulation currency to me. If you keep just buying small dips on New Zealand CAD, I think this thing heads back to like 83. Obviously, if it comes all the way back down to like 78.36 was where the low is, then I'll adjust my yellow box to the highs at 83. So if we come back down here, like slow and steady scaling in, I think there's support. We go right back up to resistance. That's a good looking trade of trade small, dollar cost average in, and then take profit at resistance. I actually do like that trade. So I'm long. I'm long, and I'll probably add a little bit more to those bottoms. New Zealand Swiss, same thing. And other ones like, do we just put in a bottom? If so, can I track it? Could we do a 3 to 5 wave move? Hopefully we can. New Zealand yen, nothing. New Zealand dollar, a little bit softer than the Aussie dollar, but still, maybe a really strong support level here around 55. If we go from 55 to 60, that's a 500 pip range. I would like that trade, actually. So what we seem to be doing here on the efficiency side is just slowly coming back into the inefficiencies that we saw back in March and April this year. And we'll see if this offers support. Dollar CAD, keep an eye on it. If dollar CAD gets up to like 44, 45 again, I'll probably end up selling it. I think oil is going to be a pretty strong play in 2026, 2027. I think bullish oil. Dollar Swiss, right side of the trend line. Just want to see if we catch a bit on the dollar, this thing has room to rip. I'm looking for profits in this pocket at 87. I'm still long for some swap. Dollar yen, ideally is a sell it at 158, sell it at 161 if I'm going to kind of call the top. Otherwise, wait for a pattern to emerge. What is surprising here is we've now gone a couple of weeks since the surprise prime minister win, and we still have not filled this gap. So this gap fill is 148. How nice would it be to have this thing trading at like 158, and you got 1,000 pip gap to fill, trading up here to 160, almost 162, and have a 1,400 pip gap to fill. And also we can go all the way back down to the lows at 140. So anyway, I'll be patient. I'll see if the yen can reward me at some point. Okay, that'll do it for today. Let's see here. What else? Forex stressful, require more patience. Yeah, I just wasn't a scalper. I was doing just fine, trading small, building positions, pattern trading, but that was a big switch from what I did before. When I first started trading, learning from a professional, he was managing a fund. We scalped and day traded, and it was not a hard system. It was just, to me, it was like every single day, like I wanted to treat it like I was playing a video game, but in real time, it was hard to trust a green arrow on my chart because it was noisy. It was hard to trust a red arrow on my chart because it was noisy. But when you look back in hindsight, it's like, if I would have, it works. But what I got uncomfortable with is like, I just wasn't comfortable taking. I opened my accounts with like $2,500, and I was trading 1 to 2 standard lots. That's insane to me. But I didn't know that when I first started trading. So I was making a couple $100 a day. I was making $500 sometimes, and then I'd lose it. So it was a lot of choppiness for a while. But I slowly moved the needle. I did pretty well. But also it was just like the discipline of, I'm watching a guy do it live every day, and I know the rules, like don't lose more than 20 pips, don't overtrade, don't double down. So come back and trade the next day. But I just, my personality is more equipped for bigger pictures, trade smaller, build positions. And, I was fortunate to run across somebody that they were more of a position trader, more of an investor in the currency markets. And so they would look at these big, fat, wide open areas where like, look, if this trend line breaks, I'm going long. It's going to be a 500 pip move. I'm going after it. And they would put in, 10, 20, 30 standard lots, and they would roll in with 50K profits on a win, 100K profits on a win. I saw a guy make over $1 million in 6 months on the euro dollar with 1,000 pip trade. That was instantly, I was like, I want to trade like that. It doesn't seem to be as stressful when it's like you just wait for these. It'd be like if you had a boat, okay, if you had a boat and this giant net is out there to catch some fish, and all of a sudden you just see all the fish swimming towards you, and they just go into your net. That's what it felt like when I was position trading. Is I would just start testing all these levels and all these areas, and then I'd also build my position nice and small, so I could also reinforce my risk management. I wasn't trading overly large. I wasn't overly leveraged. And essentially, I ran a currency fund that was never leveraged. Even though it's a 50x leverage account or 100 leverage account, I traded with micro lots and mini lots until I built up standard lot positions to make, my profits. So, but that was my style. That was better for my personality, better for my risk tolerance. So anyway, trading plan on risk management trade journals. Here's a good way to check it out. If you go to my YouTube channel and look for a search, let's search for videos here. You can search for, let's just type in risk. So here is Trading 101 for risk on, risk off in currencies. What are the currency pairs you trade during these risk off regimes? Trading 101, adding to winning trades. That's a good one for low risk, high reward. This is essentially how I ran a currency fund for over a decade. This video, it's 40 minutes long, but it's mostly based in building small positions, taking really high probability patterns, and then adding trades to it. So, that's a good way to check it out. But my first rule is it's what nobody listens to. What nobody listens to or nobody hears me say it until it actually matters. It's like the Mike Tyson thing, which you got to plan until you get punched in the mouth. If you just traded smaller, trading would be a lot easier. It's like, but I just think like everyone is in such a hurry to make as much money as you can. And it's like you're playing with like the double sword or the double-edged sword of leverage. So it's like I want to be a base hit trader that gets on base, 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 wins most of my trades, and have the occasional double or triple. I got some big wins. I've got some big wins under my belt that I've had over my career. But there's ways to craft those strategies. So I just think the trade-off is if you're going after like high reward, I mean your high reward is pretty much the sister of high risk. So there's always the trade-off. But my point is if you trade small and you get on base a bunch of times, I don't know. I think you'll have a lot more fun just surviving the markets, knowing that if the market's up, down, sideways, you can find a way to carve out income. And that's kind of been where I've been at the last 10, 15 years. So that's what allowed me to scale up my capital and trade to make a pretty good return every single year. Do it like fairly. I'm not going to say it's not stressful. It's certainly it's a lot of effort every single year. It's a clean slate. I never think that my accolades of one year and last year was up nearly 40%. This year I'm up over 30%. Like that's great, but I'm not going to rest in that and be like I'm so good at trading. Next year is a brand new market. Next year is a clean slate. Nothing matters anymore. You're only as good as your next trade, in my opinion. If I'm still trading, you're only as good as your current trades. You're only good as your next trade. So I don't want a trade that's ever going to blow me out. I never want a trade that's going to be super high risk and stressful. So just keep grinding. 15-second time frame. Yeah. I mean, whatever, man, to each their own. If you want to stare at the markets for 30 minutes a day and grind out on second tick charts, that's great. If you want to stare at the market for a couple hours a day, that's great. You want to put a trade in that's, set it, forget it, you can do that. There's all sorts of ways to trade. Ultimately, what we're doing is you're just trying to, it's one of those, choose your own adventure books. Not everybody's going to be a great currency trader. Not everybody's going to be a great stock trader. Not everyone's going to be a great option trader. Not everyone's going to be a great futures trader. Not everyone's going to be great at crypto. But somewhere it's like you kind of dabble and get your feet wet. It's like there's ways to invest. And I'll end this. It's like trading doesn't have to be difficult for anybody. If you have a long-term horizon, trading should not be difficult. Because I want to say for the last 70 to 80 years, the amount of money like one time $10,000 invested, time in the market, I'm not sure what year it was, but I think it's like 1950 to now, $10,000 is now worth over $4.5 million. Now, again, there's inflation and what does an inflation cost? And I don't know. But the fact is of $10,000 in 1950, it's probably a lot of money, but it is how many times multiple itself by just one time invested. That's a great thing that the market's done, but that's time in the market. Not everyone has a 50-year horizon. But if you gave yourself a 5-year horizon, a 10-year horizon, 15 or 20-year horizon, it's very difficult to not make money as long as you stay somewhat consistent. When the market is at discounts, have the cash to buy those discounts, you're usually rewarded for that in a 10, 15, 20-year cycle. At what age you started trading? Have you blown an account? I started at 18. I was 18. My brother was 8 years older, so he was a bit more mature than I was. But I was interested in, for high school graduation, I opened up a Roth IRA when I was 18, and I've been trading that thing for 25 years. So that's part of it. And then we ran a little investment club together, and we had like about 15 members at one point in time, and we had some cash to work with, and we ended up closing the fund around like 2020. COVID shut down the college my brother was working at, so some of the members wanted payouts and wanted to redeem everything. So we paid everyone out and liquidated, dissolved. But it was a good 20-year run. Have I blown an account? No. I've had some big drawdowns though. I mean, when I was more aggressive, I've taken. I mean, one of my biggest drawdowns would have been probably managing. I don't know, one like when I first got over $1 million. I think the most I had a drawdown wise was about 20%. So I was in a 20K or $200,000 drawdown on $1 million. Like that's, that was a long time ago, but it seemed very on the verge of being irresponsible. So I've been just constantly like tightening and tightening and tightening and tightening my risk where I don't want to take that much risk. Now it's like even this year, Liberation Day stuff, when the market was down 20%, I was down about 6. So I've done a much better job incorporating way more options in my investments, picking and choosing everything with defined risk so I don't just get blown out during these crazy events. And obviously, if the market's down 20%, I'm down 6%, I'm doing something right. And when the market's up 14%, I'm up 30%, I'm doing something right. So my risk adjusted returns have been much more favorable because I play a lot of defense and I just go after base hits. So, but I've been, it's been risk averse for a decade plus. Risk matters. The only reason I'm still here is because I'm trading pretty small and conservatively. But fortunately, it's been enough capital where I don't have to take a lot of risk. So, and it's not like the market's gotten easier per se. I mean, we're going to deal with a lot more volatility. At some point, we're going to deal with a nasty bear market. At some point, this debt bubble ends badly and we have a major, like global accounting reset. I'm sure it's going to happen in my career. So, you can either run from that type of stuff or you can look at it like there's going to be advantages. There will be advantages. Like if you have the presence of mind to buy some ridiculous like 40, 50, 60, 70% correction in the markets. I mean, I just want you to think about that for a second. If we have this terrible bear market, like 2008 all over again would be down 50+%. If you have the ability to scale in while that's declining and survive that recovery, you're going to make at the very least, if you're down here, you're making 100% return on that investment. In this area, you're making somewhere between, let's say 60% to maybe 30% return. I mean, just insane. You're going to double your money in a couple of years if you have the ability to get the dry powder in near the bottoms. Okay. What's even crazier is if you're down, let's say the entire market is down like 70%. And I've seen some of these crazy numbers. Like some people like, if we have a bear market, it's going to be so bad and so nasty. So let's say the market's down 70%. How much does it take to go back up to these highs? Because a 50% pullback is 100%. So being down 70%, let's look at it. Let's say that the S&P can go down 70%. Okay. And again, it's just numbers, but it's kind of crazy. So let's go SPX. Let's say that we drop 70%, which is going to scare the daylights out of everybody. And maybe it never happens, right? This market's too good. There's too many backstops. There's too much manipulation. We'll never let it happen again. Maybe. But if it ever did, 67.91 down 70%, puts us down to about a 2,000 SPX. Okay. Now let's say 7,000 is the high. And we're talking, a couple years from now, this market just absolutely pukes on itself, can't stop, won't stop to the downside. We go down to 2,000. Well, if we are investing, it's going to take time to build through this. This is all just hypothetical, right? But my point is, if something crazy like this happens and this thing's back up, you're up 200 and some percent of your capital. So if I could get to a point of like, hey man, all my risk capital that's invested is fully invested at a 50, 60, 70% discount, I'm going to make a lot of money in probably a matter of years. Could be a couple years, could be several years, but it's like, how nice would that be? I mean, I would love it. So I'm not saying I'm welcoming this crazy bear market, but there's going to be some ebbs and flow. I mean, look, you can see this right here. Look at how this market's behaving. Up and down, up and down, up and down, up. Guess what? At some point, we run the cycle and we come back down. That's going to be the key level to keep this bull market in check, because this could keep greasing the wheels for forever, for all we know. But if this structure ends up breaking, I said this during April this year, it's like if the structure breaks, none of this is good. This is terrible. And I would say that we probably would come back down to like a 4,000 SP or a 3,000 S&P. But if this happens, my gosh, the opportunities of going all the way back up to the highs again would be like like back the trucks up and get invested. So, but All the while, you're going to have tons of victims, tons of casualties, and you'll have people that have lost their entire fortune, which would be awful. But the wealthiest individuals will come out ahead with more assets to show for it, more money to show for it. And that's the crazy stuff about the market is it's just a game of survival, and there's a lot of money to be made. Just don't do anything stupid. But that's why it's the ultimate game of greed and skill and time and survival. You know, it's kind of like life, but it's gamified and it's dramatic and it's noisy. If it was easy, everybody would do it. All the people that are showing you stuff on Twitter and X and how much money they're making, there's also a thing called, bear porn and stuff that they'll show like, oh, I lost everything. It's like, who gives a shit? How are you trading? Are you making money? Do your best. All right. Yep. So as I said, plan for the best, prepare for the worst. I mean, I think that there's still some good things to come. I'm cautiously optimistic right now. I'm cautiously bullish. Either this market is, going to go into some pretty massive distribution cycle, or we're going to blow the tops off and go into straight up like super cycle mode. And this will be like the late 90s all over again. And there will be lots of gains in late, that last run where it's like, I'm not saying like stupid euphoric companies don't make any money and they're worth, 100 times sales, but I'm saying, frothy valuations that are unsustainable, the highest on record. At some point, the market's going to have to deleverage itself. And, those will be the next like 10, 15, 20+% corrections, and we will get them. And the issue is like a 20% correction could easily become 30 to 40% as well. So, just be careful on picking those bottoms. This is why I trade hedges. I mean, it's pretty cheap to have hedges that pay, 20 times, 30 times risk, because they're there if you need them. And if they're not, then be happy that the market keeps melting up. So, all right, I'll let you go. Have a good Friday. We'll talk soon.